Bitcoin is up almost 40% since the start of April. At the time when Bitcoin crashed to 74k, people were screaming for lower prices. People were saying Bitcoin was going sub $65,000. They were saying there was a great depression coming. They were saying the recession was here and there was an economic collapse, and it was all Trump's fault. Fast forward, now you're up almost 40%, and in the last 12 months, Bitcoin's up over 65%. Now, during these lows, we were screaming bullishness. We remained bullish because we understand Bitcoin, we understand crypto, and more importantly, we understand that central banks around the world love to print money. In this video, I'm going to show you why we were so bullish during this drawdown, why we remain bullish, and what we think is coming over the next few months. So the reason we were able to stay super bullish during this downturn was because we know one thing. Central banks are addicted to printing money, and the US government has to print trillions in the next couple of years. And the reason, they have a huge debt problem, which most people will know about. We've spoke about a lot of time on the channel, but just to put it into numbers, the US must refinance $28 trillion in debt in the next 4 years. Well, that's a massive problem for Trump, especially because interest rates right now are at the highest level they've been in years. The 10-year Treasury averages around 4.5% right now, and that's a huge problem, meaning that debt costs are going to go through the roof. What that means for the US, who operates a $2 trillion deficit, that means that deficit's going to expand. The interest expense is going to increase, and that's going to put more pressure on the deficit. And what happens when governments have deficit? By that I mean they bring in less than they spend. They have to print to cover that difference. They have to borrow and they have to print money. In fiscal year 2024, the interest expense for the US was over $1 trillion. So half their deficit is just going on interest expense. Interest is now the biggest expenditure for the US government, even more than the military expense, which is about an $800 billion expense. This is a massive issue, and the only way to roll over this debt is to get yields down. How do you get yields down? Well, that's a massive problem for the US government as well. You see, over the last 20 years, the number of treasuries held by foreign holders has been on a steady decline. China, Japan, the EU, they've all been slowly offloading the amount of treasuries they actually hold. You see, because the US operates a trade deficit, they import more than they export, which means they buy goods from abroad, sending dollars out to the EU, China, Japan. Obviously, China's a big winner in this. But what does China do with those dollars? They buy US government debt and earn yield on it. Well, over the last few years, we've saw a big shift from China. Instead of reinvesting those dollars in the US Treasury market, they've been buying gold, they've been buying copper, they've been buying useful items, because they know US government debt is going to get inflated away, and the value of those dollars is dwindling by the day. They've started buying gold like it's going out of fashion, because they know it'll protect their purchasing power in the long run, rather than holding dollars. But what happens when you have massive supply of something and no buyers? The interest rate to entice people to actually buy the debt has to go up. And that means it's a cycle, it's a doom loop. It just means that the debt is getting ever more expensive to roll over and refinance. So you may be thinking, why did this make us bullish on Bitcoin? Well, we know one secret, and that is that eventually the Fed is going to have to buy their own debt. The Fed is going to buy the government debt and force yields down. The more buying of the debt, the lower the yields become. But what happens? People just disappear from the market, because if you're competing against the federal government to buy something, you're just going to let them win, and then they're going to print trillions of dollars to cover that expense. China, Japan, the EU, the UK, they're not going to buy US government debt when the interest on it is 2 or 3%, because average inflation over the next 10 years is likely to be at 3%, if not higher, because the money printing involved to cover this debt expense is huge. And this chart shows exactly what's happened. This is a pattern that's been going on for the last 30 years. The Fed has slowly been increasing its holdings of government debt. In the last couple of years, it started offloading some, but by May the 1st, the Treasury had given up. They had decided they need to step in and start buying their own treasuries. You see, at the start of the month, Scott Bessent, the US Treasury Secretary, announced that the US will be buying some bonds back, and they will be buying the oldest bonds instead of rolling them into auctions. And what does that mean? That means QE. It's just called a different term. Now, one of the other reasons we remained fully bullish in April, despite the noise around the tariff war, is because we understood it was just that. It was noise. The trade war is just noise. The mainstream media in the US hates Trump. They always have, they always will. So anything he does, they're going to find the negatives and shout the loudest about it. And generally, when the mainstream media all agrees on something, you should take the other side. If the mainstream media is telling everyone the same thing on every single channel, they're probably wrong. It's a distraction, it's a narrative, it's a smear campaign. That's the way I took it. And when you actually look at the trade war and tariffs, you can see that the US GDP is actually made up predominantly from services. 80% of the US GDP is made up by services. Services are barely affected by tariffs. What is affected by tariffs is the goods economy. And goods only make up 20% of the US economy. But what's interesting is goods make up 47% of the China economy. The Chinese economy is reliant on goods coming in. And what does that mean? That means that the trade war is probably impacting China way more than the US. On top of that, China exports massive amounts of products every year. The US doesn't, as we've already spoke about. The US operates a trade deficit, China operates a trade surplus. Tariffs impact China way more than the US, and that's why stories are coming out that Chinese factories are closing down. But at the same time, the Chinese real estate and their overall economy is facing massive deflationary pressures. But they can't devalue the yuan because it will cause serious economic problems. So no matter what anyone says, no matter what the mainstream media is telling you, these trade wars, the tariffs, they're affecting China more than the US. And long term, there's going to be an agreement. They're all going to come together. They're all going to make a peace deal. And that's going to be very bullish for markets. Typically, you find that the day these announcements are made marks the bottom, or at least very close to it, because the news can't get worse after that. After that, all that can come is good news. And that's why we were so bullish despite all this noise. On top of this, we know we are getting closer to rate cuts. Whether it happens in June, July, September, whatever. Rate cuts are coming, and every single month that ticks by just gets us even closer to rate cuts, which means more liquidity. The Fed is the only central bank not cutting rates right now. China's stimulating and cutting rates, the EU's cutting rates, the UK is cutting rates, and Canada is cutting rates. All the big economies are cutting rates. I think Japan will start again very soon. But the US is the main one because it operates the thickest capital markets in the world. So it has the most impact worldwide. And the dollar obviously plays a role in that. Now the Fed says they're waiting for inflation to cool. But Trueflation already shows that the US inflation is actually way below 2%. And with oil down over 23% since Trump took office, inflation looks likely to cool off over the next few months. Oil is a key component in the supply chain. It's the number one input, meaning if oil's down, chances are inflation's going to come down because it impacts the price of every single good. And we saw that this week with PPI coming in way below expectations. It still surprises me that all these economists can get this so wrong. All these economists expecting positive PPI, even though oil was down. It was obvious that PPI was going to come in much lower. PPI is the cost of producing goods. If it comes in lower, chances are prices in the economy are going to go down. And then this week, we learned that Donald Trump is pushing through massive cuts to the price of prescription drugs in the US. He feels the US is unfairly treated, with Big Pharma charging way more for drugs in the US than they do in the EU. And he wants prices to be in line. He wants the US to get more favourable prices. And this is going to reduce everyday costs for the average American. If we know one thing about the US and its citizens is they love a pharmaceutical drug. By reducing the costs, he's going to take the burden off a lot of everyday costs for Americans. So overall, for me, the Fed has been backed into a corner. Inflation has fallen, PPI is now negative month on month, oil is way lower than expected, and Trump is continuing to cut across the economy. So the Fed has to reduce rates sooner rather than later. And the fact that we know they will cut, it's not a question of if, it's a question of when. That is why we are so bullish for the rest of the year. Now, in the second half of this video, I'm going to cover what I think is coming next. There's two scenarios, and I'm going to take you through both. So typically in May, there's a famous phrase that says sell in May and go away. And basically what that means is volumes and traders are way down during the summer months. Wall Street traders go on holiday, they take vacation, and ultimately the markets are a lot quieter. As you can see here, average returns between January and April are 2.2%. Average returns for October and December, 2.5%. May to September, just 1.2%. So it shows that over time, the trend is that between May and September, returns are a lot less for the Dow Jones, and this translates through the entire economy. Now, if we look at Bitcoin over the years, we can see that this trend translates to Bitcoin as well. In 2021, Bitcoin between the 1st of May and the 1st of September was down almost 24%. In 2022, it was even more dramatic, 50%, as Bitcoin retraced from the highs and made its way to its bear market low. In 2023, it wasn't so dramatic, just 12% Bitcoin dropped between May the 1st and September. And then last year, we had a 13% drawdown during the summer months. So if trend is your friend, then we can see that between May and September, we typically see a sell-off in Bitcoin. And volumes are light. Traders go on holiday, people take summer vacation, and ultimately the markets are a lot quieter. So based on this, it looks like we could be in for something similar this year, with Bitcoin going into a consolidation and just trading sideways, a little bit down, a little bit up over the summer. Looks like it's more than likely. Now, if that does happen, then I believe we are set up for a massive Q4 of 2025. And that coincides with ETF approvals. So as you can see, there are loads of ETFs waiting to be approved this year. We've got some starting in June, but the majority are in October, including about 7 just for XRP. This list isn't even the full list. There's even more, and I think the total runs to 72 ETFs, all needing a decision by October. If they all get approved, then the crypto market is going to go ballistic. It's going to open up floods of capital to flow into crypto, and it could send the altcoin market flying. If all these were approved, I fully expect the crypto market, the altcoin market, excluding Bitcoin and Ethereum, to double within a few months. That's going to mean huge pools of capital and massive altcoin pumps. Now for me, this does look like a very likely scenario. However, over the last few months, I have been debating a second scenario. And the second scenario, to me, looks like it's becoming more and more likely. Now, we spoke a lot about the macro picture and how that plays into crypto. Money printing is coming, and money printing is the key to Bitcoin and crypto. Global liquidity increasing is very bullish for Bitcoin. Now, as we can see on the screen, this is the 10-year yield on government bonds. It's basically the borrowing rate for the world, priced in dollars. And you can see that we're currently consolidating around 2007 levels. Everybody remembers what happened 2007 and 2008. So these yields should be a warning signal for everyone. And as we can see from the article on the screen, the US has around $7 trillion of debt to refinance this year. And the majority of it needs done by June. Now, with yields so high, it makes refinancing that debt very difficult. So my prediction is that we actually see a massive rally this summer, and it's caused by massive QE, likely some form of QE, stealth QE by the Treasury Secretary to buy a lot of this debt. They're either going to have to create something new, like a Bitcoin or a gold-backed bond, which has been surfaced a lot of times, and it makes total sense to me, or They're going to have to just do it the old way. QE, buy their own debt, and hold it to maturity. Now for me, the biggest problem is if they start buying this debt, then it's game over for the bond market. And ultimately, the US just goes into yield curve control, which Japan's been doing for years. They buy their bonds when they get to a certain interest rate level. The US could set it at 2 or 3%, and every time the yield goes above that, they step in and buy. This will flood the market with QE. This will be bull run times 100. It will be insane, and the amount of money flowing in will eclipse COVID by about 3 times. Now, if that does happen, I expect the dollar to fall through the floor. I expect the dollar to dump hard. And everybody's probably thinking, well, that's bad. Why would they allow that? But the dollar weakening is actually very bullish for the global economy, for growth, and for the US. Now, since Trump took office, the DXY, or the strength of the dollar, is down 8.5%. And what that means is other currencies priced in dollars are now looking a bit stronger. It also means anyone buying goods from America, it's became cheaper. So a lot of countries around the world import LNG gas from the US. Well, those imports have got cheaper recently as the dollar has weakened. Oil has got cheaper for countries around the world because oil prices have fell, but also the value of the dollar has fell at the same time. All these things are very bullish for global growth. On top of this, countries can print their own currency. Now, one of the issues for countries printing their own currency is it devalues them versus the dollar. However, when the dollar's bleeding out and dumping like this, it allows countries around the world to stimulate their economies with their own currency because they can weaken their currency at the same rate the dollar's weakening. So it's very bullish for global liquidity. Now, on top of this, we also have stories of revaluing the gold. If the US was to revalue its gold, which is currently only valued at $42 an ounce, they would unleash massive amounts of buy pressure for the US Treasury. If they revalued gold, every $4,000 increase equals $1 trillion that the Treasury can use to buy back its own debt. This could be a massive lifesaver for the Trump administration. And if they do this, they bring down borrowing costs, they make lives of Americans a lot easier, and it allows Trump to live out his legacy. The biggest problem is it's a one-time thing. They can't just keep revaluing the gold. And I believe the trade war with China is going to lead to some compromises and potentially the revaluing of the Chinese yuan and the US dollar versus gold. And I think it's going to be almost like a global reset. And that's why we're seeing so much institutional interest in Bitcoin right now. People know fiat currencies are done. They're absolutely doomed. Long term, people aren't going to transact in fiat currencies. On top of that, we are about to see the biggest wealth transfer in history. When the boomers all retire, they all start handing their wealth over to their grandsons and their granddaughters. They're going to buy crypto and Bitcoin. They're not going to buy Google stocks. They're not going to buy traditional equities or property. They're going to buy crypto. And we're going to see a flood of investment over the next few years. I believe this all begins very soon, and I think this second path could play out. We could see a massive melt up into July, potentially when the Fed will actually start cutting. It could be a sell the news event, and then we see a massive blow off top at the end of the year, triggered by these ETFs. Now, no matter what happens, Bitcoin is currently up 38% from the lows. The tariffs, the trade war was just noise, and we have now seen the market reaction. I do believe this is going to be one of the most bullish years for crypto ever. I think there is life-changing gains, and we are on the cusp of it. The two paths forward, I believe, we see a melt up to the end of May, and then sideways summer, sell in May, go away, and then a massive end of the year. But something inside is telling me that actually this rally goes on longer. I've said it for a few weeks now. Trump loves to deceive Wall Street. He loves to play games with Wall Street. And he said time and time again, now is the time for Main Street to win. Wall Street have had it all their own way for a number of years. I think that's why he likes Bitcoin and crypto. Bitcoin and crypto's promise is to get the everyday guy rich. It's not about big institutional investors. And I believe that's why he does so many things over the weekend or at evenings when Wall Street's closed. I think he could potentially have a role to play in how this summer shapes up. The traditional Wall Street sell in May and go away, he could flip it and it could actually be a nice June, July pump. maybe a bit of correction July, August time, and then we see a massive rally at the end of the year. My prediction for Bitcoin at over 200k still stands. I still stand by that. Will we get it in 2025 or Q1 2026? That remains to be seen. But the one thing that will always stay constant is central banks around the world are going to print trillions of dollars. I believe they're going to print even more than during COVID. And I think it's helped by a weakening dollar and a massive global reset. No one has faith in fiat currencies. Overall, this is the central bank's balance sheet for the US Fed, and I believe we're about to see a tick up in the overall holdings by the Fed. I think in the next 12 months we make a new all-time high, and I think it's flooded by US Treasuries. One thing we can never do is say when, but what we know is it's definitely coming. QE's coming, liquidity's coming, and the most epic bull run we all deserve for hanging in and staying convicted over these long months is coming. Will it be path 1 or will it be path 2? Who knows? But one thing is for sure, it's going to be a very volatile and a very exciting end of 2025. Let me know in the comments if you think it'll be path 1 and we'll see a melt up into May, sell in May and go away, or do we get a longer rally into June and July? Let me know in the comments and I'll be back with more videos, so stay tuned to the channel. Thanks very much for tuning in.